So, continuing on this lengthy series on stock options, how to get there, learn about what is a stock, how to get to it, how to search for it, learning some of the numbers too important to know, what is wealth. So, let's say, you know what, I'm going to jump the gun. I'm going to finally invest, okay? And I decided that I am going to invest in TQQQ. TQQQ is the 3 times leverage NASDAQ QQQ. And because it's a basket of stocks, it's a little bit more leveraged. I'm going to go for it. I like the metrics, all that stuff. And I'm just going to jump the gun. I'm going to do it. I'm going to buy 100 shares. Okay. I'm going to buy 100 shares and it costs $5,000, which I have in my account here. And I'm going to do it. I'm going to do 100 shares, $5,000. And there you go. Okay, I'm going to quickly fix this so that it's a market order and it gets filled immediately. Okay, so now I have my positions. There you go. I am a proud owner of 100 shares of an ETF, in this case, TQQQ. Great. Let's have a nice day. Let's celebrate. What next? What am I going to do next? Okay, so this is where you slowly start coming to the next level of knowledge. Number one, I'm going to have to wait until this stock goes from, you see it right here, 55, maybe it can go to 56, maybe go to 57, maybe even go to 60. And then I will sell all those shares and get a $5 per share return. Okay. All right, but what if I want to keep it? Like if I sell it, then that's it. My entrance in the market is over and that's it. So, well, one thing I could research on is, does TQQ offer dividends? Dividends are stocks that pay you because you're investing into their stock, and instead of the companies taking your shares and putting into the company, they're going to give it back to the shareholder. So as a reward for investing with them. Okay, do they give out dividends? And some companies, some stocks give out dividends. Usually what I call the older timer, the old time companies. Think of Coca-Cola, Chevron, Walmart. Their level of growth, innovation of the company might have tapered off, so they give out bigger dividends. Whereas really exciting startup companies like Nvidia and Tesla, I don't think Tesla's, yeah, it is public, or let's see, Google or some mining company, they don't have money, resources to give it back to you because they're invested heavily into their company. So they're not going to give out dividends. So you might want the company that gives out dividends. Okay. Now, in this case, TQQ does give out dividends, but I believe it's every quarterly and it's really tiny. Now, here is where the magic begins. You're going to make the leap, find out. You realize that whenever you search up a ticker symbol, you look at the buy sell price. There's a thing called charts, there's research, and there's a thing called options. It's right on the same page and has all these strange dates with drop downs and even tons and tons of numbers. So this is where I'm finally putting at the final chapter, how to get to zero to stock options. So did you know that your position here, 100 shares of this stock, can be used as collateral? It could be used as someone's collateral for the future, and in return, me, the owner of 100 shares, I get paid a premium. Okay, let me say that one more time. This 100 shares that I own outright, it could be sold to someone else at a certain date at a certain price, but until then, they're going to pay me a premium to hold on to it if it crosses that threshold. Okay, so, and if it doesn't, everything's fine. We shake hands. I still keep my shares. I still keep the premium, that added money, and the buyer of the insurance does it again. Okay, so look at this 100 shares, and lucky enough, 100 shares equals one contract. Okay, so one contract. So I'm going to look at the option chain now. Okay, now a lot these dates, all it means is that, hey, I'm going to sell 100 shares. And when do I want it to be done? When do I want it to be due? In 1 week, the end of this week, next week, because maybe I'm going to be really busy this week. What if I'm really busy this month? I'm going to set out a 1 month to expiration, 1 month until the contract is due. Maybe because I really don't want to deal with a lot of things. Just once a month is fine. The interval is fine for me. But to make this easy, I'm going to select 2 weeks out. Okay, 2 week is not busy enough, but busy enough that next week I'm going to have to really check on this option insurance policy that I have sold. So now all of these numbers, okay, what does this mean? You know, you have calls and puts, and you have the strike in the middle here. So the strike in the middle is the actual price of the stock right now. Right now it's at $55 and change, and right here it's at 55. You see this dotted line here? The dotted line means at the money. And it could go both ways. It could one day swing to 55 flat, go to 57, but right now it's at this amount. So I'm gonna handle the call side because I have the shares, and I can only sell what's called covered calls because I have the shares. Okay, now if I don't have the shares, I only have cash, then I'll handle this side of the transaction called puts. And that's called a cash secure puts. I'm going to put up money instead of stocks. But because you just saw that I bought stocks, 100 shares of TQQ, I'm going to handle this side of the transaction. Okay. So looking at this strike, the next question I'm going to say to myself is, what am I comfortable selling my shares at? What am I comfortable selling, expecting TQQQ to rise up in price that I'll actually have to sell these shares? Okay, so let me give an extreme example so that's kind of clear. I'm okay with the $60. I think that if I sell a $60 strike price and the stock actually goes to 60 or 61 or 62, wow. First of all, yes, I unfortunately did lose my shares, but my NAV, the money now, I'm appreciated 5 points. So I actually gain a lot of uh, net asset value. Okay, so this will make more sense as I'm talking. So I'm gonna select. You see, this is last. This is bid and ask. If I'm selling always means bid. You know, you bid. Okay. I'm going to sell the 60 strike price. It's going to pay me 44 cents. Okay. I'm going to go to the next page. Okay. So here's the information you need. I have 100 shares and I'm going to give it up for collateral. The buyer thinks that it's going to go up to 61. And I am the seller selling that share price, because the buyer is buying it very cheap. The buyer is only going to pay like 47 cents for it, right? And if they win big. But we both agree that we have until December 12th to close this deal. It has to breach the 60 strike price. I'm going to fix this quantity. It's only one contract because I only bought 100 shares. Okay. And it's hovering at the 44-cent mark. And right here, this is it. This is where everything has led up to. Right now, I am going to make in my pocket immediately $43. Okay. So that is the full circle arc of the conversation, going from a novice, a person who doesn't even know what stock is, the stock market, finally knowing the fundamentals of stock, knowing how to find it, knowing what to buy, holding on to it, realizing, can there be more done to this asset that I'm holding? I don't want to wait, and I don't know who knows when that it's gonna go high. I could buy low, sell high. Can I do something in the meantime? Maybe I can give it dividends. I keep hearing this thing called options. Okay, well, what is it? oh, I'm ready to relinquish my shares that I bought at $55 a share. I'm willing to sell a policy that, hey, if it goes up beyond 60, it's all yours. I will sell you this option and I'll be given the money in return, um, the money for the $60 price. And then in return, I'll do cash secure puts or the next phase. Okay. But I am out of the shares of stock. And I'm rewarded for $43.35. Okay. So that is how the full arc of what options are. Options let you do something with your asset. Okay. I think I have a pretty good analogy is that let's say I have the real portrait of the Mona Lisa in my house. Okay, someone gifted it to me, I inherited it. I now have the portrait of the Mona Lisa. It could just sit there. It will appreciate in value. It could just sit in my basement collecting dust, whatever. But can I do something in the meantime? Yes, I can. I could sell tickets for admission for people to come view the Mona Lisa. Okay, that's what I can do. So there's an asset that's sitting there. It's gaining appreciation. That's a good thing. I've essentially added another stream of income. In this case, admission ticket sale prices. Now, in the option cases, I'm selling insurance policies against my asset that I'm holding. Okay, so that is the lengthy arc of what options are. And I hope that you take some of these lessons to heart. And I'll see you on tomorrow's live trade again, where I trade with my son on a real account to help fund his tuition. Bye.